trade agreement. We have a panel coming up shortly, but before that, I want to bring in an expert just to give us some good high-level overview. Please welcome to the stage Charles de Bourgeois. He's a partner at Mazars.
Good morning. I'm very happy to introduce this panel with this prestigious panelist. And our topic today is the question of financial industry as the backbone for regional integration. And as a matter of fact, I do not intend to answer to this question, as it is the duty of the panelist. And I don't want to rise above my condition of experts. And what I intend to do is to open tracks through questions I would like to ask to them, and consequently to address these very significant questions about AfCFTA, regional integration and financial industry. I'm going to ask three questions. One, is financial industry the backbone of regional integration according to the current scope of AfCFTA? Two, should the financial industry be the backbone for regional integration? And three, what should be done to strengthen this integration? So, question one. Financial industry compared with the current scope of AfCFTA. And if I look at this current scope, I will say that the answer is rather no. As if the scope of AfCFTA is wide, financial industry is only a part of the scope as a service and investment, and AfCFTA does not, at present, refer to single currency or cooperation for monetary policy, nor banking union with single supervision and guarantee of deposits, or African passport for financial institutions operating on the continent. But one of the main recent initiatives of AfCFTA, PAPSS, is a prominent service proposed by financial industry. You know that PAPSS is a centralized payment and settlement systems launched a few months ago by AfCFTA with the support of the Secretariat of AfCFTA. And what is interesting to consider with this initiative is that PAPSS is a significant step to make AfCFTA moving forward by making easier cross-border payments intra-Africa and bringing trust to economic actors. And a question could be, can PAPSS considered as SEPA is in Europe, as a cornerstone of African economy and financial sovereignty? Question two, should it move and should the financial industry be the backbone of regional integration? The opinion is not unanimous, as we know that some economics or politics fight against global finance. Well, I'm not sure they will make a deal today in front of this audience. But to illustrate this interesting question, I like to quote these two gentlemen, distinguished economists that you can see on the screen, which reported on an event organized a few years ago by Banque de France on financial integration in Africa. So why financial integration in Africa? The question could be to supplement sometimes insufficient or poorly mobilized internal saving, or to improve the allocation of financing for high-yielding productive investment, or to help SMEs and consumers to access to financial services, particularly with credit and payment methods, or to improve the efficiency of the banking system by increasing competition and disseminating good practices, including supervision, or to accompany fast development of Pan-African banks. And last but not least, more widely, because financial industry, as I said a few minutes ago, is a pillar of soft power and sovereignty. Third question, what should be done to strengthen this backbone? So how to speed up? And the question I would like to raise are, should AfCFTA leverage on existing framework and policies issued by regional organizations? And should it promote homogeneous regulation framework, enhancing regional ones and promoting continental coordination between main regions? And also, how to mitigate risk which could rise after financial integration? It's an important question. As we know, financial integration, reinforce risk of contingence between countries, but also between the banking system and the states. And we know that in Europe after the creation of a banking union. We also know that a good financial industry is a well-regulated and well-supervised one, and the effectiveness of regulation depends on its capacity to balance between the objective of controlling systemic risks and not waiting on the financing of the economy. So the questions could be, on micro-prudential perspective, how to supervise on a consolidated basis Pan-African groups and cross-border transactions. On a macro-prudential perspective, how to harmonize or put in place the three pillars of Basel framework in the continent. And last but not least, how to balance between integration and subsidiarity. Thank you for your attention.
Thank you, Charles. A bigger round of applause for him, please. Awesome. He set the stage nicely for our conversation about the African Continental Free Trade Agreement. Please help me welcome our four panelists to discuss this in a bit more detail. Professor Benedict Orama, Chairman of Afreximbank. Thank you. Please also welcome to the stage El Hassan Akaba, Founder and Managing Director of Mansa Bank. Oh, I'm going to need that applause to keep coming. Please welcome Dr. Jamila Sharif Aidun, CEO of Credit Registry. Yes, keep clapping, finally. And last but not least, please welcome Dr. Mabuba Dane, Vice President, Finance and Corporate Services at ECOWAS Bank for Investment and Development. Ladies and gentlemen, thank you so much for just joining us to talk about this. We have heard a lot about the African Continental Free Trade Agreement, operating since January 2021, ratified in 43 African countries now. But we have some challenges, right? For instance, the funds allocated to African trade have been falling, and we have a deficit of about $100 billion a year right now. So based on what we heard from Mike and the Pan-African Payment and Settlement System and the stage that Charles has set for us. I want to start with you, Professor Rama. What is AfCFTA doing to deepen and support the African financial sector in order to facilitate the African Continental Free Trade Agreement implementation?
Thank you very much, and let me also join friends in thanking Jeune Afrique and the organizers of this wonderful summit for putting it together. I think it holds the promise of creating a platform for important discussions about what affects us as bankers within the continent, and especially in the context of the integration journey we have begun. Yeah, AfCFTA Bank recognizes that the key success factor for integrating Africa, for pursuing development in Africa, is capital. I would say it's capital stupid. It's those who have control of capital that will determine the development trajectory of our continent. So at AfCFTA Bank, we are trying to make sure that Africans control African capital. Because when Africans control Africa's capital, that is where we're going to see progress. And one way of achieving this, by no means not the only way, is making sure that African financial institutions are largely in the hands of Africans. After all, Americans own and control American banks. Europeans own and control European banks. Chinese control Chinese banks. Indians control Indian banks. Why is it's only Africa that foreigners control African banks? And you don't need rocket science to tell you that unless you control your banking system, you're not going to see anything. If you are lending money to anybody, forget about all the collateral you take, it's trust and knowledge. So if I am here and I'm trying to lend money in Kazakhstan, I have a bank we control in Kazakhstan. And we have the managers there. The credit comes to me wherever I sit in Africa. And they tell me the borrower of this, they call one name for Kazakhstan. I say, why is this? Where are these people from? And then all of a sudden I see from the same Kazakhstan, I see another name of somebody from my country, Nigeria. Immediately I say, okay, people from that part of Nigeria are good people. I'll put away the one of Kazakhstan and give to the Nigerian. I understand. It doesn't mean I don't want to help Kazakhstan. It's just the way it is. So that is why we are doing everything to make sure. And one way we are doing it is to fund African financial institutions who are buying those banks that are being sold by international banks that are leaving Africa. But we are doing more than that. There are other things that we know we need to do to make sure that the financial system works. And one is strengthening the capital. We created the Fund for Export Development in Africa, FEDA, which is headquartered in Kigali. And one key element of what they are doing, their mandate, is to invest in financial institutions. And is to invest in financial institutions to give the capital that is required to create a strong financial institution. And to make sure that that financial institution is not too country specific. So that if we have a bank in Togo, we try and make sure, if it's possible, that it also has shareholders coming from some other parts of Africa. And FEDA will achieve that when it invests and wants to exit. It takes account of who to sell to make sure we achieve this objective. Because that's how you bring integration within the financial system. And the greatest problem we have, we cannot lend amongst ourselves, is it has a colonial history. We don't trust each other. We don't know. We know people outside that we know about ourselves. So we have tried to deal with this digitally. So we have developed and launched the Africa Customer Due Diligence Repository platform called the Mansa platform, where we have onboarded profiles of African institutions, with first starting with banks, big corporates, and now at SMEs. We have about 10,000 already onboarded, and everybody on that platform is issued an Africa Entity Identifier number, which under the arrangement we are reaching now with the Global Legal Entity Identifier is going to be used interchangeably. But what that does is that it improves confidence. You don't have to now worry so much about doing compliance, because you just go, click of a button, you see the compliance. We also know that international banks are leaving the continent. Many of them are departed. So many countries do not, there are some countries that you won't even have a bank that can do letters of credit, not to talk of in the intra-African direction. So we've made a deliberate decision as a bank that we will give LC confirmation lines and trade services for at least 500 of the 600 regulated banks on the continent. We have already just under 500 with RMA links. We are today the bank with the widest network of messaging connections on the continent. There's no, I don't think there's any, in fact, very, very, any other person coming must be a distant second. But we want to take it even to the end. So if you want to send any message anywhere in Africa, we can send it. We already have provided the trade services to more than 200 banks. The goal is to give $8 billion in trade services lines. I think we are now at about slightly under $4 billion. This will make it possible for intra-African trade financing, intra-African trade LCs to be done. I don't want to go into the Pan-African Payment and Settlement State because Mike has said it. So these are some of the things we are doing to make sure we use the banking system to promote and strengthen AfCFTA. Thank you very much.
That's a really good primer for all the work that you were doing. And I think you made an interesting point about Africans owning African capital. And El Hassan Akaba is doing exactly that, because you are the founder of a bank, a locally owned commercial bank, 100% owned by African players. And you're excited about the potential for the African Continental Free Trade Agreement, because this is also your story.
Thanks, Larry. I think I'm very happy to hear the word from President Harama. I will speak in French now.
Sure.
Parce que je pense que, est-ce que venez dire
I think what President Rama said is very important, that African banks, the African economy must be held by Africans. It is very important. But when we try to create Mansa Bank, we have as mission to create a bank that belongs to Africans, have cap equity from Africa. I think the president of BOD is around. And we understand that our development depends on our capacity to finance our own economies. Today, why the intra-African trade is critical for a bank like Mansa is that when we move as like Mansa Bank, we do import or export, and we must have information on banking correspondent, and it is more and more difficult to give account to other banks when we are African and have banks that we own. In the meantime, banks that have been sanctioned for non-compliance are European banks, not African banks, meaning that African free trade is critical for our own survival. It's just to say that the survival of our activity depends on our activity to accompany our local actors and discuss with other African countries. This is a good initiative for us, and I think that our initiative depends on it. We can't be left aside, because these countries, we try to encourage them to work with African counterparts, and we are not compelled to give KYC of thousands of pages and then we can close accounts without notice, because our countries are risk countries. So A bank like Mansa, we think that intra-African trade depends on our survival. That's why we are engaged for it.
African bank, how are you thinking about handling Pan-African disputes if they were to arise in this sort of environment?
Thanks, Larry. Looks, in our region, Wamu zone, we have already, I would say, a regional court that is there to settle dispute between players. We have here the OADA, what we call it. We call it OADA. In Abidjan, we have la Cour commune de justice et d'arbitrage, qui veut dire que dans les pays de la zone UEMOA, il y a déjà une cour qui est en place de justice pour régler ces problèmes-là. Et cette cour de justice...
This Court of Justice in Cote d'Ivoire is acting, and unfortunately, the trade among the countries of WAEMU having the same rights, free movement of people is up at is not even up to 15%. I think it means that we must discuss. It's not just a matter of dispute that must be settled. We have a common court that try to settle these issues, and in the meantime, intra-zone trade is lower than 15%. So we need to think and understand the nature of our economies, try to stop producing what we don't consume, and we start producing what we do consume. And that's what FCT is trying to encourage, and that's why Imanta Bank is also in the same logic, promoting the same African intra-trade. Thanks.
You at Credit Registry were the first credit reference bureau in Nigeria, and you've done important groundbreaking work there, making sure that people have credit histories and that allows them to access capital, financing, and all of that. How does that fit into this dream to build an African continental free trade agreement covering the entire continent?
Thank you, Larry, very much. Hello, everyone. I can certainly say, and I'm actually going to buttress something that Sergio said yesterday from IFC. He said that robust trade, for that to happen, there has to be trade finance. And one of the things that we realized early on in our dream and aspiration to go into Nigeria with a credit reporting system in an environment where the financial sector was seeing off the chart non-performing loans. There was no internet activity available or broadband.
Again, this is 2003.
2003, almost 20 years ago, you guys. Next year will be 20. There was no trust in the system. Everything from no unique identifier. You had the lack of regulation, the lack of legislation, you name it. All of those things are fundamental in order to have a system such as the credit reporting system. Now that system is what really stirs an economy. It's what actually helps to stimulate economic activity. And when we talk about doing trade across Africa, a system like that absolutely has to exist. And I'm going to explain a few reasons why. One, in order for businesses to be able to grow, they need access to capital. He's talking about giving capital, my colleague here, to the banks. Those banks need to release that capital to the businesses. Those businesses have to be able to trust the consumer that is coming to them to get access to those goods and services. Those consumers also need access to credit. And what you'll have is a domino or multiplier effect. The businesses are able to produce more. The consumers are able to purchase more. You're going to need to hire more people. They will earn income, and that income is what's used to pay off that credit with interest. And so that economic activity is critical. And so one of the things that needs to happen for this trade to take place is to have that exchange of information on credibility of the business and then of eventually the consumers that need to, purchase any goods or services. The one thing I love about Africa, and I'm from America, if you guys can hear my accent, but one thing I love about Africa is community. And what I've seen in my travels across Africa is that community is so important. And if we think about it, and if we really do this well, by funding Africa businesses, they will become our community. Literally, across Africa, we will be one big community. Community takes care of its people. It employs them, it educates them, it makes sure that they have a strong religious, moral value, all of those things. And those are one things that I see that by empowering this free trade area to happen, and information being a part of it is going to be a success.
We'll talk a little bit later about the information sharing landscape or recommendations that you see here. But Dr. Mabuba, she talks about community, and you were telling me about how you enjoyed living in Nairobi, Africa's greatest city. No offense to Togo and Lomé. You've been in the international investment and development banking landscape for more than 20 years. So give us a reality check here. How hard or how easy will it be to navigate the complex financial regulations across the continent to make something as important as the AfCFTA possible?
You know, like Professor Arama has said, Africa has reached a level where we have to do what we have to do. And today, fortunately or unfortunately, the central bankers, regulators, seem to start following the trend. And like our colleague from Master Bank has said, we recognize the importance and the urgency of African banks to be owned by African banks. What does it mean? It means that putting regulations that speaks to our needs, that speaks to our realities. Today, look at how rating agencies are rating Africa. It's like giving an 18-year-old a Ferrari to drive. They can crash it or they can drive it. Today, international regulations may not necessarily apply to us. And I am so glad that yesterday people was talking about or questioning about the appropriateness of Basel III on us. We're working very closely together with the ECOWAS Commission to address regulations. And what we are doing, the fantastic job that President Orama and President Serge are doing on the intra-Africa trade side, we are doing it, but more on the infrastructure side. But working with the ECOWAS Commission, working on regulations, but implementing infrastructure projects that unlock the regional trade collaborations between the countries. Last year alone, the 2 last years, we raised 170 billion CFA, connecting the countries. Whether we do it with infrastructure, road, or power plants across the West African power pool, but this you cannot do it when you don't address the regulations. When I produce power in Guinea, and I want to move it to Sierra Leone, to Liberia, to Ivory Coast, or when I produce power to Ivory Coast and I move it to Burkina Faso or Mali, regulation is a must-do. Number 2, President Orama said something extremely important, enabling our banks to have to access capital to finance our African businesses. And please allow me to crystallize the attention of the African people on one thing. Can you imagine over the last 6-9 months how the benchmark dollar rate have moved from almost nowhere to 4-5%? What does it mean that I trade with you, but when the trade is against me, I increase my money such that it is benefiting me? Maybe President Orama, maybe President Serge, it's time now even we the development banks to start being a bit more vocal on getting the same currency.
Right.
Not only at the West African region, but at a Pan-African level. Today, we are currently trading at a big disadvantage. We trade in euro, we trade in dollars, a currency that we don't control. and maybe the regulations and the laws about setting those foreign exchange rate is something that is, penalizing us. And I strongly do believe that it's time that the regulation don't only speak about policies and procedures and governance, but also the currencies.
All right, that's a really important one, because I think there's people here who come from countries where the currencies are some of the worst performing in the world, and they are sort of like almost slaves to a currency that they don't control. And how can you therefore, I think that's why what Mike was talking about in the Pan-African Payment and Settlement System, being able to pay in CFA, in CDs, in Zambian Kwacha makes a huge difference. But I want to pick up on this point about regulation that you mentioned. The African Financial Industry Summit platform earlier this year came out with a report, and they urged regulatory bodies and policymakers in Africa to accelerate collaboration and do more to harmonize regulations across the continent to make AfCFTA work. And so I think that's directly related to what you were saying. What are your thoughts?
Look, the convenience will come naturally. Because today, if West Africa want to trade with East Africa, the two regulations have to speak each other. It saddened me when I see surplus of maize in Zambia.
And people in East Africa are starving, needing that maize.
Thank you. And I think that the platform that the PAPS platform is just maybe one step into the right directions, but making the two banking system across the countries to speak, the banking laws to speak, the settlement terms to speak, even the trade terms. Why do we have to use letter of credit that have been labeled in a way that it's like German speaking to Italian? It's very different to a Zambian speaking to a Senegalese. Because when banks use the terms and conditions of letter of credit, it follows specific rules. When a small cattle farmer send the cattle from Burkina to Ivory Coast, sometimes they even don't need papers. The banking system might question it, but how many billions of dollars, sorry to say it, Jewish people are trading between them in diamonds without any paper? They say, masala, masala. Maybe the banking system need to adapt themselves in terms of regulation and also reinventing themselves in a way that they can cope with how business is done in Africa. And I strongly believe that if you see the Hausa in Nigeria buying cattle from their parents in Burkina or Niger they have ways of doing business. I think that it's now up to the bankers to be creative enough, to the legal system and the regulation to be flexible enough such that they support the way people do business. And I strongly believe that with a fantastic job that President Arama and the African Bank have been doing over the last years by creating the intra-Africa trade. And I was so glad yesterday night that they recognized Madam Kanayo as the leading executive female running the transformation.
All right, I want to point out two things here, that in a moment after this panel, we have a great conversation with Serge Ekwe, who's here, President of the West African Development Bank, and you mentioned the work that he's doing. We'll have that straight after this conversation. And I know you have a lot of questions for the panel, so I'm going to do one or two more rounds of questions, and then I will take audience questions and participation. So if you have something to say, hold your horses. We'll come to you in a second. But I want to come back to you, Professor Rama. Based on what you've heard from the panel, what do you think can be done to make the African financial sector more effective?
No, thank you. I want to, I like the word more effective, because they are effective. Despite the odds, the criticisms, they are really effective. But we will come to what has to be done. But let me address the issue of regulation. And address it in the context of what we are doing here in AFIS. They just finished negotiating just a few months ago, well, maybe a year or so ago, the protocol on services in the AfCFTA. I really don't know whether, apart from the central banks, whether the commercial banks made any major contributions to it. We introduced the PAPs introduced that regulation, and it was accepted to be negotiated. So we are harmonizing positions with the central banks and all that. But apart from that, there are so many things in the trading services. We touch on financial services that will have benefited from the banks. You know, the kind of conversation we are having here. And then having positions, the issue of license portability and things like that. Tax issues, but when you operate and even when payments are made, or the kind of things that will integrate the financial system even better. One aspect of it we are dealing with, we managed to put into the agenda for the negotiations, and basically dealing with the pain points that we have today because of the way payment systems are fragmented. But there are many other things that the financial system, the banking system, that we can do to have a more harmonized regulation. And I say this because on the goods side, because of course we are talking about services side, on the goods side, we are doing something concrete about it because something similar exists. We have standards, multiple standards all over the continent. So what we've started to do, using the platform of African Regional Standards Organization, is to harmonize standards under the goods. We've done about 300. We provided grants and used our own grants to mobilize grants from Germany, from the Islamic Development Bank and all that. So we've done automotives. We prioritize what the negotiations wanted. But I believe that even under the platform of that African Regional Standard Organization, you can start something on financial services. There are ways you find a way to get some ideas, even if you think you've negotiated and closed, you open them again. I think it is very, very important that we do this, because unless the financial system is integrated, other things will not be integrated. Now, how do we make them more effective apart from the regulation? I said it earlier. We have to have a banking system that can speak to themselves. You know, you need to have the interconnectivity that is required. And that's why I emphasize the RMA, the relationship we have all over the continent. And we think other banks should do so. They should have swift relationships so that if somebody wants to send a message, he can send to everyone. It looks so simple, but it's hugely important. And that is where we can be more effective in promoting the exchange of value amongst ourselves, and also the interconnection we require. Many years ago at our present bank, we tried to launch the African Bankers Association. We did launch it many years ago. We didn't quite move. We were much smaller those days. I think it's something that people should think about again, because Americans have it. And it is within that bank association that you can start to deal with the kind of thing Mabuba is telling us. I think he's right. Why don't we do systems that support what people are already doing rather than bringing something to impose on them? But it is through that kind of conversations that banks decide, okay, amongst ourselves, this is what works for us. And we stop just singing, chorusing what others are singing somewhere else. You know, because what you do, they tell us something, we come, we adopt it. Hook, line, and sinker. But we can say, oh, no, economies are different. Take advantage of what people are doing elsewhere. look at our own system and say, what can we copy from outside, adapt it to our own, so that we can use it to more effectively address our issues. And then, of course, there are the issues of the risk, managing the risks. I think the Master Bank MD mentioned something about that. You know, what you don't know is risky. I think what we've done in our present bank is to try to help the financial institutions to gain that knowledge. Doing that digitally from what I said, trade information, the platform for customer due diligence, and even also providing research that people need. But there's more to be done, and more to be done directly helping others bear that risk. And we try to stay in the middle to help people, say, confirm letters of credit that go within the African space, provide the guarantees that also support inter-regional trade. And the work that Credit Registry is doing, I think we knew when they started operating in Nigeria. And I must say congratulations, because I didn't know that it would go this far. So for you to have gone this far, now it's actually needed. But it has to go regional. It has to really, really expand. And I want to tell you, if you want to go regional, if you're looking for a partner, we are there. So we will work with you, because that helps. It helps to make everything effective. And then, of course, payment. There are 42 currencies on the continent. Fragmented. We spend $5 billion per annum paying others to provide payment services, because we want to transfer money from Togo to Nigeria. Those $5 billion we can, if our banks get $2.5 billion of it, they would really feel good, you know? But I'm sure they will not even charge anything near that. And the payment will be instantaneous almost. The PAPs, you are talking about 120 seconds. The transactions I've seen, 10 seconds. 10 seconds from Ghana to Nigeria. Whereas if you try to do a payment from the old system, it may take you 2 weeks. It may not even happen. But you know what that means? You know, when we talk about $5 billion, when you are doing a deal with somebody, the person, you transfer money to go, given the way we trade, the guy is not going to ship anything until he sees their money. So you're out of pocket for 2 weeks. Are you following? Waiting for the other guy to receive the money and then do the shipment. Can you now understand why our GDP is low? Because the velocity of transactions is slow. And that money is held up in another place and is helping to boost liquidity. And is helping to, they're using it to on-lend to you again at Mabuba's 5%. No, but if you calculate it, based on the number of transactions we do, it begins to give you an idea of the bondage we are in. So all this is, if we begin to deal with it as banks, and that's why I must congratulate John Afrique for creating this platform. I hope they can look at it, make it open, so that even other media houses can be part of it. We use it to revive the African Bank Association. We use it as a platform to change regulations. We use it as a platform for dialogue with the central banks, because only when we come together can we gain the attention of the regulators and our leaders. Thank you very much.
Thank you, Professor Rama. Dr. Mabuba, you're nodding very vigorously, so I'd love to hear your intervention. And as you make your remarks also, I'd love to hear how the ECOWAS Bank for International Development is supporting the AfCFTA dream?
You know, in the spirit of collaboration, President Orama has already taken the lead of setting the platform, supporting people's like PAPs. But we are more now on what to trade and how to trade it. Let me give you 2 examples. Last year alone, we invested across the region 170 billion CFA just to unlock the regional integration. Every infrastructure project we do today, the first question that our board asks, what is the regional integration component? Last year, we built almost 2 roads linking Senegal to Mali. There is a very ambitious ECOWAS Commission project, the Lagos-Abidjan corridor. Can you imagine the quantum of goods that can just flow once that road is done? Simple things like border posts. Last year, we financed almost 7 border posts unlocking the countries. West African power pool. If I tell you that Guinea-Conakry today had less than 22% of power access, they have 2 of the largest hydropower plants. It just suffices to build a connection to link those Swapiti hydropower plant to the West African power pool to get it done. Nigeria is producing gas. Senegal will be producing gas very soon. Can you imagine where our neighbors, Sierra Leone, does not have more than 15% of power access? If you don't have power, what can you produce? Number 1. Number 2, access to finance. Last year alone, we financed $300 million to local banks to boost financing. Now, collaboration between us, regional and development banks. And please allow me officially to thank my elder brother and President Serge Okwe. Last year, we were raising 120 billion bond. The last 10 billion, I called the President Serge and said, President, I need 10 billion to complete. In less than 1 minute, he told me done. And President, please allow me to thank you in front of everybody to tell that these are the type of collaboration. I need $100 million. I reach out to President Orama. President Orama, can you help me? What do you need it for? I need it to unlend to bank to support SMEs. We are working on it. I strongly believe that now Africa is at a point where we African, we can make it happen. Let me tell you 2 commodities, and I hope, and I believe, and I pray that the African people will catch the trade opportunity around it. Ghana import $300 million of chicken. Ivory Coast import 600,000 metric tons of maize. Senegal import 450,000 metric tons of maize. Can you imagine the number of jobs that West Africa can just create by growing maize?
Right.
When we grow it, we need to transform it. We need to transport it. We need to store it. We need to trade it. And now this is where the AfTA is. Thank you.
You were telling me, you mentioned border posts and why they're important. You're telling me a fascinating story about border posts and why sometimes they're so inefficient and they are impediments to trade within the continent.
I will tell you the story. When I was regional managing director for corporate investment banking for Barclays, I was financing an agribusiness called Zambif. And Zambif was trading almost close to $200 million with Zambia. And one day I went with the MD of Zambis and tell him, okay, I would like to follow the goods. He told me, no, we take an helicopter. I said, no. We're going to take a 4x4.
We'll drive.
And we drive. This was the first time of my life where I have seen 2 kilometers of trucks at the Kasumbalesa border between Zambia and DRC.
2 kilometers
of road.
Just trucks.
Trucks. And some of the drivers were telling me, we slept here.
Wow.
Number one. Number two, when I was regional MD of Barclays, I was traveling from Mauritius, arrived in South Africa, landed, and saw that I have to give an approval because my Botswana team was applying for a tender. And for some reason, it was on my desk for more than 2 days. I didn't, the PA didn't see it. The only chance that I have to deliver the physical copy is to fly myself. But listen to the story. I had to give the hard copy at 9 o'clock. The flight was not possible. I have to drive between South Africa to Botswana. It's maybe 1 hour. I arrived at the border, 5 midnight. The border was closed. I slept at the border between South Africa and Botswana. Guess what? By 6 o'clock, we had almost 1 kilometer of trucks.
Wow.
To tell you that the challenges of the intra-Africa trade is real. And what President Orama was saying that to send the money, you will have to wait 2 weeks. Sometimes it could be more than 2 weeks. Recently, we financed a road in Liberia. One of our correspondent banks, I will don't mention the name. They seized a negative press article on one of the EPC. The money was blocked for 1 month. 1 month. Now imagine if it is a trade opportunity. Gone. Thank you.
That's crazy. That's crazy. I think, Mr. Kaba, we agree that financial integration is a cornerstone of AfCFTA, but you've also spent a long time, your entire professional life in this industry. He's mentioned some bottlenecks and challenges. What do you see as some of the other challenges, and more importantly, what are your solutions? How do we make this possible?
Thanks, Larry. I think Mr. Madova was saying that how to be creative for the bank, how the local banks need to be creative. But how to be creative when the banks is not owned by Africans? That's a question. We could not be creative. So that's why it's very important for our economy, for our banking sector to be also owned and driven by Africans. Without that, I'm not seeing how we will be promoting this intra-African trade. It's not possible because those international banks, first, they are financing the companies that are selling goods to our countries.
Right.
So that's true. It's the facts. So I would say for me, first, really, we don't need more reform again. We need just to accelerate what have been started by AfCFTA. Reform after reform will lead to nothing. We just need to start things. We need now vision and action. That's all.
All right, short and sweet. Dr. Jamila, you already got an opportunity to make this regional, to go across the continent. President Orama is on board. So what are your recommendations to make sure that we have that some level of credit sharing, information sharing among the different credit reference bureaus and people in that space in different parts of the continent? Because right now, there doesn't seem to be an ecosystem that travels across borders.
Correct. I believe one thing, before I go into that, do you mind
By all means, go for it.
On a few things? So one is that I'm hearing that speed is incredibly important, right? And I can't emphasize enough that in Africa, we're sitting on top. I'm gonna even just say it, a ticking time bomb. We have the power of a youth that is right on top of us, and if you look at the statistics, 70% of them want to leave the country. That is unbelievable. They don't believe in our continent. They don't believe in the countries that they're living in.
The countries are not working for them.
And it's not working for them.
That's why they want to
So
japa.
speed, yes, japa is real, just like he said. So the speed at what we deliver right now, we're talking, is so important. And that infrastructure, in order to do that, has to happen yesterday. And I also want to say that we shouldn't be adverse to doing things that have proven to work and work at scale. We have to work at scale in Africa. And and I'm looking at everything from food production to education to electricity and power, we have to be able to work at scale. That means that we need to identify what is working in other countries that we have not yet adopted, and then how do we change what needs to be changed to really make it work for us. And that has to happen immediately. And it's a perfect example of what Credit Registry actually had to do. In order to tackle a country like Nigeria, it was the first one we went into, and our vision is to go across Africa. So looking for stakeholders, collaborators, and everything in the mix to do that. But one of the things we had to adapt when other, I'm gonna say international bureaus came to look at the market, they condemned it. No, it's not ready. It is not ready. So we had to do things such as integrate biometrics into a credit bureau system. We're the first credit bureau in the world to do that. And that is because, yes, that is because of Nigeria and the lack of unique identifiers. So that now has become the pivotal thing in the Nigerian market, is to get a bank verification number. And it was because we had proven it through our own proof of concept that that would work for Nigeria. Other things that are incredibly important when we talk about food, how do we do mass production? I see the Malams working, they have their farms and everything, but what can we do to invest in them in order to make that scale as well? And that's also gonna come, is getting them into that financial system. We have to be able to put them in the system because credit and access to finance is a journey. You don't just start a business and say, hey, I want credit. Just like you don't go and apply for a job and say, hey, I want to be the CEO, and you've never worked before, right? So getting them started early on with small transactions, proving that they're able to be credit worthy, giving them an opportunity to learn and fail in order for them to know the power of that access and what it means to the whole system. And then lastly, I'm gonna say that collaboration across the board from regulators, operators as a whole is also going to be incredibly important with the right investments. And so creating this, and I'm gonna use my friend over here, Pabs, this highway analogy, because that's exactly the way I see it. Us creating a highway for other data providers, other excellence that has been put in place on all parts of the continent, and that highway for it to be able to travel on is what the infrastructure that needs to be invested in order to make this work for Africa at speed.
At speed and at scale. Okay, I have like 2-3 minutes to take questions. If you have burning questions, raise your hand now. If not, I'm just gonna keep going because we have so many great questions. Can we get a microphone to this gentleman at the front, real quick? Please introduce yourself and then ask a quick question and then we'll give one over there and we'll wrap it up. There. Yes. And then get another one to the gentleman over there. She can't see me.
Yes, my name is Patrick Akinwunton. I'm very passionate about Africa's one market. So we've listened today, and I congratulate AfCFTA and PAPS, because for sure, we do have a payment backbone that has been thought through. I think Mike did an excellent job talking about it. The question I have is, so we have a payment network. We have credit registry network being discussed. But if you look at Africa, for the trade to happen, what's the transportation network?
Right.
So the total rail length network in Africa is 82,000 kilometers. The US alone has over 220,000. So when we talk of movement of people, AfCFTA, and my good brother with BEDC, I think there has to be serious focus on rail transportation. It's the cheapest for moving the chicken, you've said, the maize you talk about,
Right.
the goods across the continent. Thank you.
Okay. Thank you, sir. I think that's self-explanatory. Go ahead, sir.
Okay, hello, everybody. My name is Sidi Heba. I am from the National Bank of Mauritania. And I would like to thank Brother Hassan Kaba for raising the issue of corresponding banks. A few years ago, we lost our corresponding bank in the US, Bank of America, Societe Generale from New York, and Citibank. They all closed our US dollar accounts, and we are being penalized. At the same time, they overlook Dubai and other, fiscal haven where money is being washed in broad daylight, including Russian money and Iranian money. So what can we do to overcome these hurdles now in Africa? Knowing that to come here from Mauritania, I had 3 stopovers: Bamako, Dakar, Senegal, Abidjan, and we are in West Africa. So I would like you to help me, understand how we can overcome all these obstacles.
You had 3 stopovers from Mauritania?
Yes, I took the plane of Mauritania Airways to Abidjan, and I stopped in Bamako and Dakar, and then Air Côte d'Ivoire to get here. And we are in the same sub-region. And if we can integrate,
That's crazy.
how can we syndicate or unionize to confront, the US on this issue of corresponding banks?
Thank you, sir. Dr. Mabuba and then Professor Ram.
This is exactly the reason why the ECOWAS has created ASCAI. And the same reason why the ECOWAS has also created EcoBank. But I still believe that, as you rightly said it, there is a lot to be done. Let me tell you just one sad thing that I heard 2-3 days ago. One big regional bank, and I will not say the name, was having their annual budgeting system. And the guy, one of the MD, was telling me, I was coming from Paris. I said, why Paris? He told me that it's the easiest way for everybody to get in. It's sad. And it's a bank that is in 8 out of the 15 member countries in ECOWAS. I totally agree with you that on the airline companies, on the airline space, things need to be done. And I also would like maybe to people like President Orama, President Serge, you get closer to the head of states. There are so many fragmented airline companies. Why don't we pull all those things together? I'm not saying that we should recreate, let's say, Air Afrique, but get something run by private people. I strongly believe that it's doable. Why, for example, I used to live in London for 10 years. To go to Spain, I pay 10 euro, EasyJet. Why I have to pay almost 1 million CFA from Lomé to Dakar? And the same applied to the airline company, to the railway lines. I think that there is something that needs to be done, and I strongly believe that now that AfriExim, BOAD, and BIDC are, we are working more and more closely together. I have no doubt that it can be done. Thank you.
Okay, I wanted to add a response to those 3 points. Mr. Kimota, you mentioned the issue of railways, and I will tell you quickly what we're doing in railway. But before I get there, you see, I am one of those, and I think our bank generally, we believe that infrastructure deficit is a generalized problem of African trade, not specific to intra-African. Generalized. So we have to deal with it in a general way. And let me explain to you why we believe that, and that's the approach we are taking. Today, Africa's total trade, depending on commodity prices, is anywhere between $900 billion to about $1.2 trillion. It depends on how commodities behave. The issue is, why is intra-African trade share of Africa's total trade $170 billion? Because if our total trade is $1 trillion, it means the available infrastructure can carry $1 trillion of trade. Why is our share not 500 billion? That's why we had to tackle trade information first. That's why we had to deal with credit registry first. And because the investments we have to make on railway cannot be made only, the railway and other infrastructure cannot be made just by government. If we follow the estimates that the ADB have given us and others, in 10 years, we will need to do about $1 trillion of investments to deal with the infrastructure deficit. We've looked at it. That is about, I think, about 50 or 60% of the entire budget of Africa. If we took, every country took a budget and put it, so 60% of the budget will go to that. It's all feasible. So it can only be done under a partnership between the public and the private sector. But the private sector can only go there when it is bankable. It can only become bankable when we create the information flow that makes things to begin to happen, so that some businessman sees that if I do a PPP for a road from Abidjan to Lagos, there will be traffic. Right now, it probably cannot prove it. So that is one element. But there are things we are doing that we believe can also help deal with this. For example, we are working with TeleDB, with building the Western Railway in Ghana that will go all the way to connect to Burkina. We actually finalized the railway to develop the railway from the east of Guinea going to Buchanan, because that was the easiest way to open up the iron ore mining zone in that piece to pass through to Buchanan, because it would cost $3 billion less than building a railway all the way along. If you know Guinea, it's like a horseshoe. We have a project in Angola that we actually link the Atlantic to the Indian Ocean, because the railway will go from Lobito to that area in DRC where you had that long, and connect through Zambia, so you have that connection. So there are a number of things going on, and it is important that they be done. But each of these projects are going to be done under debt-creating structures, because we've seen the traffic that they can carry, and we have partnerships that believe that they can help us generate those traffic. And I'll quickly go to the question you asked on the correspondent banking. I just mentioned, I responded to that. And I believe you must be part of what we are doing on the AfCFTA. We are dealing with that. We are dealing with the issue of correspondent banking, first by reducing the cost of compliance. When we reduce the marginal cost of compliance, then probably this kind of thing will stop. But we don't want to go begging anybody to return. So what we are doing, because we have the capacity to do, SAG can do, I can do, AFC can do, TDB can do, EPID can do, we can provide. And we're already providing, that's what I mentioned to you, we're giving 500 regulated banks all trade services. And today, I think we've covered the entire continent. I would think. And in fact, it's profitable. We're making money out of it. So we're not doing anybody a favor. We started saying we cannot go on our knees, because I will stay some central bank governors from some countries come to tell me, oh, we don't even have a bank that can open a letter of credit. Yes. So we say we will change them. We change that. Look at a country like Eritrea. By the time they couldn't pay anybody in the place. We went there, put the switch. We are the one making all the payments and helping them to import food. So I think it's something we can solve amongst ourselves, so we don't blame anybody. After all, I don't see EcoBank going to give trade services line to somebody in Spain. We should be able to deal with some of these problems ourselves. So that's the airline business. Sorry, just to, because it's important for PAPs. If you do PAPs, you solve the airline problem. You ask me why. You see, many of our airlines fail because their money are stuck. Their money are stuck in many countries because the people cannot pay them foreign exchange. And that affects the pricing you're talking about. So that's why it's costly to travel regionally. And even double problem is then that the airlines price in dollars, price in depreciation in the currency, so it becomes too expensive. But it becomes the case that if you want to travel to buy a ticket here, you buy at the Ethiopian airline, and Ethiopian airline goes through the PAPs, you pay just in CFA, they get bill in Ethiopia. You will see airlines opening more routes regionally immediately. You will see the cost of flying go down immediately. So I think we do not know the ramifications of some of the things we need to do to change things. We say others are having fun in their own continents. We are not having. Because they make the bed so they can sleep well. We need to make our own bed. Thank you very much.
And we're going to leave it there. Thank you so much to the panel. Before they step down, I'd like to invite, please give a big welcome to the President of the West African Development Bank, Serge Ekwe, who will join me in conversation over there. And at the same time, please thank my panel. You've been fantastic. We appreciate your time. All right, I want to quickly wrap up this conversation, President Ekwe, about the African Continental Free Trade Agreement. A World Bank report this year found that if AfCFTA's goals are fully realized, 50 million people could escape poverty by 2035. So and real income could rise by about 9%. So it's a huge opportunity, isn't it, for the AfCFTA? Gentlemen, I would request that we please settle down so we can finish this conversation. Mike and Nick, I know them so I can mention the names personally. Please sit down and settle down so we can have this conversation with President Ekwe. So the AfCFTA is such a huge opportunity for us on the continent if we can get the financing and remove the barriers to make it happen.
Yeah, Larry, thank you very much for your question. Thank you for having me. It's a huge honor for me and for BOAD to be here. Before I answer to your very question, I'd like to thank the organizers of this great event in such a gorgeous place, and the highest authorities of this country, the Republic, the Togolese Republic. And doing so, illustrating the idea that Lomé can become the city of the financial industry. We need that. Now, coming back to your very question, yes, the AfTA is a huge opportunities, and as one can understand, there are opportunities and risk. Now, on the opportunity side, yeah, it's I think Jamila mentioned it. We have to think big, we have to think at scale. All right. So it is the belief that growth is in our hands. And basically, we just have a little bit of memory here. It reminds me of the Lagos Action Plan.
Right.
That was back in the 80s, in 1980. And the objective was to create this community by Y2K. Now, the reality is we need to understand that, and it has been very well described in detail about the opportunities and the money we're spending and basically the money we're losing because precisely the FTCA has not been put in place at the highest speed. Let me give you an example. You know, when you need a currency A, and to do that, you need to get rid of currency E or currency C. Unfortunately, today, you need to move to currency B and then to currency C. And doing so, you have to pay on what we call the spread, bid offers, the bid offer spread. And that costs a lot. That cost has been estimated at $5 billion on a yearly basis.
Wow.
Now, it's huge. All right. Now, the question for us is, how do we make sure that we think big so that a trader based in Addis Ababa can deal with another buyer here in Togo, with the support of the bank, with the support of the financial industry. And from what I've heard, and basically using a PASS system, it is a real need, so that we can, first of all, try to avoid the bit of a spread I was mentioning earlier. And I think the ultimate goal will be to go only for one single payment at the end of the day, which is a continuous linked settlement that would avoid precisely the bit of a spreads here.
I know that support to the private sector is one of the key areas of your work at the bank. So specifically, how is the West African Development Bank supporting this plan that the continent has put together to build a free trade agreement covering every single part of the continent from Cairo to Cape Town?
The banking system in our region and in Africa in general is, I mean, we have too many banks actually.
We have too many banks.
Too many, definitely.
There needs to be fewer, stronger banks?
Of course, of course. I mean, we need to go to, I think the current situation is balkanization of the the banking industry. We have too many banks. I think we'll have, one day or another, we'll have to face a consolidation period by which you will see bigger banks, larger banks, operating on the larger scale, because the free trade agreement is all about trading large, trading big, but also protecting those who are weaker.
Right.
All right. So we can do both. You know, we can trade at a larger scale, definitely, because Africa is big, Africa is huge, and basically one cannot be satisfied about the situation where. When you look at the GDP of Africa, it's approximately the GDP of the UK. Mm-hmm. It is unacceptable. We have the means, we have the people, we have the youth, we have the growth to think big. And naturally, and that's, I believe it to be the main objective of the free trade agreement, to trade in between us, between A and B, but from Addis Ababa again to Lomé.
You've heard some of the challenges from the previous panel with President Rama and Dr. Mabuba talking about, for instance, intra-Africa trade being just 16% of total trade. We had the story about these border posts that are so inefficient, that are kilometers worth of trucks, and they're just stuck there. The difficulty in accessing payments, where 2 weeks until a payment comes through and you're held hostage in this period. How do we overcome so many of these challenges and actually make this work?
Again, I strongly believe in the consolidation of and the convergence of our economies, of our banking systems, of our regulation. I think Professor, a good friend, Benedict mentioned that I think in Africa we have like 40-ish number of different currencies.
Yes.
Yeah, I mean, it's way too many, obviously. Way too many. So we have to converge, we have to consolidate, but doing so we'll have to, again, to protect the weaker. Otherwise, it could be dangerous. Now, the role we play at the West African Development Bank in our region, at least, is to support the system, to support the banking system, to support the financial industry in 3 ways. First of all, loans, direct loans to banks. Second thing, we issue guarantees. And third thing, we are shareholders in a number of institutions because it is our role to sustain, to support, and basically to give, here again, long-term funding to the industry so that they can support the economy. You know, the one thing that is striking, if you look at the number of banks, and I was mentioning this earlier, look at the number of banks in our region, very fragmented, again. If you look at the Tier 1 capital, the average of a Tier 1 capital in our region, it's slightly less than 50 million euro, 50. Core equity Tier 1. If you compare it to banks in Europe, or basically banks in France, it's 2 billion euro.
Wow.
That is the difference. It makes the whole difference because the main question, the very question, the one and only question, if I may emphasize here, is who deals with the first losses? Because again, the international system pretty much knows how to do 2 things. The system can lend you money. No, letter of, lines of credit can lend you money. And for those who do not have access to capital market, they can give you grants.
Right.
So that your head is above the water. But when it comes to capital, when it comes to the backbone, which literally means in case of a problem, who's going to help me? Then it's a little bit more capital. It's a little bit more complicated. It's all about Tier 1 capital. It's all about long-term funding. It's all about long-term savings. You cannot develop a country, you cannot develop a continent without long-term funding and long-term savings.
So what you've said so far, we have too many banks on the continent, we need to consolidate fewer, stronger banks, so that Tier 1 does not mean it's small paid-up capital. But 2, we have too many currencies on the continent. Lesotho or Rwanda or Eritrea, well, maybe not Eritrea, smaller countries don't need their currencies, if I understand you correctly. The African Continental Free Trade Agreement does not include a monetary union at this time. Mm-hmm. Should it?
I believe so. If you look at the example in which we are today in the WAMU regions, no matter what people say, it's nothing else but a success.
Right.
Stability. We can discuss about a number of things, but the facts are facts. This wall is green, the wall is not blue, right? So right. Stability, predictability, what is going to be next? Now, one can understand that, yes, this is a real success. It's a real proof of success. And as you know, as the proof of the pudding is in the eating so far tastes good.
Okay, you just recently signed a memorandum of understanding with the Development Bank of Southern Africa. You're doing a lot of work to walk across the continent. What is your takeaway for this audience about how you're thinking through the African Continental Free Trade Agreement and how we make it a reality? That's been a theme I've been asking everyone.
It is our goal. It's not a dream because it's currently in force. It has been implemented. But again, I want to remind you of the Lagos Action Plan. That's been a dream. That has not been achieved. I think today we have the rooms, we have the people, we have the staff, we have this credibility, we have the cooperation, the way we cooperate in between us, between AfCFTA Bank, between BOAD, BDC, TDB, African Development Bank, DBSA, etc. It is again it is a reality we face. I think we are skilled enough. We are, I believe, us to be close enough to tackle these issues together, because no one can succeed on its own. We know that either in West Africa, the northern part of Africa, the southern part of Africa, I think we have the means and the tools to succeed.
We have the means and the tools to succeed. Please give a big round of applause to President Ekwe. Thank you for your time, sir.
Thank you very much, Larry. Thanks for having me.